Are you guys still unprofitable? Are you guys down bad? I know that feeling. Today, I'm gonna be telling you guys what I changed and what made me profitable on the stock market. Day trading, swing trading, long terms, everything like that. We're gonna be kind of yapping today, but if you guys are eating, enjoy your meal. If you guys are driving, drive safe. And without further ado, let's get started. So first off, man, I just want to say it did take me around a year to really learn all of these lessons. And over time of trading, I learned even more. With that being said, I do recommend being very patient with it. It's a long process. You can't get rich overnight. And it's a marathon, not a sprint. With that being said, we're going to be going through everything that will help you guys out. And videos like this can really benefit you a lot because you can learn from other people's lessons rather than learning yourself. But with that being said, a lot of lessons learned, I'm not going to lie, in the stock market is going to be based on you. You will listen to people tell you guys what not to do, and then you're going to be in your head like, oh, nah, I can do this. Oh, nah. And then lose money, and then you start learning later on. I was that person. They would tell you to, have a long term. I was like, nah, I like day trading. They'll tell me, don't risk too much money. I'd risk a lot of money. And then like over time, I learned that maybe they were right. But with that being said, you guys don't have to listen to everything that I say, but just keep it in mind while trading. But first off, we're going to start off with have a plan while trading. I personally wake up or I just start on my computer 30 minutes before market open just to look at how the stocks are moving, look at some news, and just look overall with what like everything that's going on. With that being said, we're going to use an example like Tesla. So we did have a big sell off today. So don't really base it off the market. I'm going to be basing the plan off of just like a normal market, normal market open, we're just consolidating or we're moving a decent amount. With that being said, I do recommend looking at stocks and looking at how stocks move. So honestly, we're going to switch over to NVIDIA because I know a little bit more about NVIDIA. But with that being said, you're going to look at some trends first. You're going to understand trends of certain stocks. And I recommend having like 2 or 3 stocks that you look at like daily, every single day, maybe even more if you guys have more time. But with that being said, let's just use NVIDIA as an example. You're going to look at it, how it's been moving the past couple of days and even weeks and even months and just see how it's moving. But let's say, for example, you look at it here, right? Every single day, it kind of opened up the same. You have a decent high from market close, and then it normally sells off. Like it did it twice in a row. So you're going to kind of base this off your trade. Like let's say if you got into a trade, I look for dip buys, and we're going to talk about dip buys a little bit later on how to benefit off of dip buys a little bit more and how to not lose money on dip buys. But for now, let's just say for this day, I bought this dip buy. And then, throughout the day, it spiked up and stuff like that. But I didn't want to trade it that day. I didn't want to sell it that day. I want to hold it another time, see how it happens like after market close. But with that being said, for the next day, I know for sure it's probably going to sell off. So I'm going to sell it right as market opens. And it's just having a plan with how you trade stocks, when you want to buy it, when you want to sell it, stuff like that. So for me this day, as you guys can see, right, normally at around, 350, you see a big spike downwards in the stock. It's probably not the lowest of the day, but you do have normally that big spike down lower. And you can use this as a day trade opportunity too. But you can look at it at around that 350 mark for the past couple of days. And then for the next day, you can look at it. And then if it spikes down, you can get into, a dip buy right here. And that's like a perfect opportunity for a dip buy. But at the same time, before you get into a dip buy, I do recommend being updated with the news. So especially with NVIDIA and understanding everything that moves in NVIDIA. So you can have the tariffs because tariffs can mess up their revenue. You can have other things like how is other chip stocks moving. You can look at other chip stocks like AMD, Broadcom, stuff like that. And you can also look at news for them too. Like if they get bad news, it's probably going to move over to NVIDIA. You can look at other things too, just news in general and just anything, any article or anything, especially right now politically, like anything that comes up, you want to make sure that it's not too bad because a sell-off can keep continuing. As we've seen today with SPY, we've seen that, you had some decent bad news with the market data and stuff like that, started selling off, and then we just continued down. But then if you would have been like, oh, I'm gonna buy this dip buy, it dropped a few bucks, I'm gonna buy this dip buy, you see a green candle printing, that's a bad opportunity because then if you were updated with the news, you'd understand that it's moving pretty badly. But with that being said, with the news and with things like that, I do recommend having multiple news articles, multiple news sources I have multiple news sources on my phone that basically sends me a notification early, but I recommend just having multiple news sources because some news sources get it earlier than the other, and try to do some research on insider news. I could probably make a video on the best insider news, like places to subscribe to and stuff like that, and try to look for some free ones too. But with that being said, how news really moves the market, you got to understand really how it moves. So, like we're not really gonna show a good example, but like let's just say this is an example of it right here. But basically, actually, I think we could show like this one right here from yesterday because we kind of had that happen a little bit. But let's say, or hold on, actually, Dollar General actually had something that spiked their stock up the other day, and it started off with insider news, and then other people got it. So I kind of want to explain how it moves. So first off, I want to talk about a kind of a sell off first because a sell off is kind of better to explain. So like let's say, so understand that Wall Street, mainly Wall Street, they have insider news. They get the news early. So you're going to see Wall Street sell first. So let's just say if we were trading at that 78 level right around here, let me get the pen real quick, show you guys a better example. But let's say if we were trading up here at around the 78 level, right? And then basically Wall Street got the news early. You're going to see a big sell off. You're going to see it spike downwards a bunch, right? But nobody really knows what's going on. You can't, you're not going to know what's going on. You can research it, ask ChatGPT and everything, and it's not going to be out because, only early news articles got it. So with that being said, Wall Street, of course, is going to sell off first, and you might get down to like that 77 level. And then at that point, a lot of people, let's say Dollar General, for example, a lot of people in their long term stuff like that, they're like, oh, I'm already up, so I might as well sell. So you're going to get a decent sell off because people are scared. They don't know what's going on because you're going to have Wall Street sell it. It's going to go down a decent amount. And then you're just going to get the people selling it early. And then you got options coming in, bringing the stock price down even more. And then at around that $76 level, let's just say now it's public. Now, Yahoo or something came out with it. So now everybody knows, like the day traders, everybody's going to know this. They're going to start shorting the stock even more. So then you're going to see it spike down even more. And then next, you're going to see people have fear, have greed, stuff like that. And then you're going to see the secondary sell off with that, right? And then at that rate, we're probably at that 74 level. And then you're probably either going to hit a bottom, like kind of like use that example. You're going to hit a bottom and then it's going to recover, right? But with that being said, before we talk about the recovery, I want to explain how that news really works. So you're going to have like multiple levels of it. You're going to get Wall Street, and you're going to get sellers from that, people having fear from that. And then you're actually going to see the news. And if it's really, really bad, you're going to see people sell it from that news. And then you're also going to have the secondary people having fear because they see the news and they see more people selling. So then they're going to start selling, especially people in long terms, people shorting it, everything like that. So you have multiple levels of selling off. But for this example, we're going to use this as an example first before we get to like what happened today. But basically, you're going to see multiple people sell off, and then finally buyers are going to come back in. So kind of like here. So you want to look at how this candle really moves because you want to get at least, maybe not with the next candle, but the next candle's printing. You want to get at least 50% of this overall dip. So you want to fill the gap upwards at least 50%. So we kind of did it a little bit here, and then we had a red candle, but then the next candle started printing, and then this is kind of like a 75% print, right? But you got to also understand how it moves too, because bad news can really just make the stock balance out. So you can kind of see it here, because basically we're gonna technically say the candle is all the way up to here. This isn't a wick. This is the full candle, right? So basically we filled at 50%, but at the same time, this is just where it's going to balance out the stock. So normally, if you get into a good dip buy, you can buy it here and then sell it up here because for sure that's probably going to get 50%. So if you want to really mitigate your risk, you can sell it up here right away. And then honestly, after that, you're basically gambling because you really don't know what's going to happen because it can break new highs, right? It can come back up to the mark and then break new highs later on that day, and or it can break down even lower. So if you can sell it at that 50% mark, you can make a decent amount of money. You can mitigate your risk. This is kind of what I learned personally. But today, we seen kind of that happen. We had some bad news. We had some, or let's just use this as an example of, Wall Street got the news and then we went a little green after the fear. And then now we got the actual news. So then we went down, and then the actual people with fear, they started selling. And then now, the news is kind of over, but it's kind of bad news. And people understand like, oh, this is going to bring down the stock long term. So it's going to keep dropping. And honestly, we kind of seen that with Palantir, not AMD, I'm sorry, Palantir yesterday. Um, basically, we basically had kind of insider news come out, and this one came out really, really early. So Wall Street got this really, really early. But basically, Trump kind of announced that they're not really going to be doing the government spending. He's going to be dropping it like 8% every single year. And if you really think about it, Palantir as a government stock, like they're buying contracts consistently. This can prevent any future contracts or anything like that. So really, like long term, within that 5 year range, Palantir is going to be losing profits, stuff like that. So insiders know that. So a lot of people at Wall Street with the big money, they're going to be selling off first, right? So once they sell off first, people are like, "What's going on?" They start buying it back, and then you'll get the news to come out actually, and then it'll sell off even more, and then you basically just get a whole down day. It wasn't this day though. I think it was this day. My bad. It was this day. But you basically just get a big sell off with that, and then even after hours. But then even the next day it sells off because this like that news really is gonna mess up the profits and mess up everything that Palantir has like built up. But that's kind of an example of what I learned. If you want to get into a day trade and or even a swing trade, is to understand how to buy dip buys, how to prevent like losing money, stuff like that. I'm sorry, I yapped way too long about that, but it's kind of hard to explain. But I try to explain it to the best of my ability. Next thing we're going to be talking about, we're going to be sitting back a little bit, but is how to really mitigate your losses. So there's like two big rules that you should stick to, and it's one, how to prevent losses, right? And then the second one is how to prevent how much I lost. So basically, being able to have unlimited day trades, having a cash account is what I recommend having, is probably the best way, because you can probably get into, like let's say if you got into this dip buy here and you're like, oh, Palantir strong, it's going to go up. You got into the dip buy at 118 and you see it drop even more and you see two big candles, you can sell your thing right here at minus 50, but then if you don't, if you're like, oh, I'm gonna hold it, and then you hold it until tomorrow and then you're down even more, other than like you could have took a $50 loss right here and then you took like a $300 loss the next day. Like you're just mitigating how much you lose, because then once you get to another trade, you can even say, okay, I lost 50 here, I'm going to do a put option, and then next day you do a put option and then it prints $500 or something, you're up 450. So it's really mitigating how much you lose. And then another thing is having patience, because you can see a dip buy, but why are you going to buy a dip buy when you don't get any green candles? You're below VWAP and the MACD is looking bearish. Why are you going to get into a day trade? Why are you going to try and buy a call option when you see it obviously still going down? So if you think it's too late to buy a put, I do recommend just having your patience. If you miss out on a trade, it's not the worst thing ever. It could you know dip by and then go green, go to the moon. But at the same time, like you might be a little bit like sad about losing it, but buying it like this below VWAP, MACD's bearish, and it's all red, you're basically just gambling your money. There's no point. You might as well just be patient. Look for like an obvious, switch up. Right here, you could probably get into a dip buy situation here, but at the same time, the MACD. Hold on, let me look at the MACD. My bad. Oh, I can't even see it. Um, I can't even see if it crossed, because you do want to look at crosses. Of course, the crosses are going to come before it hits VWAP. But at the same time, I do recommend just having your patience. You don't got to trade that day; just trade it the next day. Because then, if you would have waited the next day, because you're like, oh, it's not even going to touch VWAP or anything like that. No, you can wait until the next day. If you want to wait until the next day, you can see, oh, it's still going down. You could have maybe you got into the dip by here when it touched VWAP, but you can see if it tests VWAP and then go below it. Because then if you see it test VWAP and it doesn't break VWAP, you could have waited a little bit more and then got into this dip by and actually made money. But it's all about patience. I think patience is another key thing to really think about in the stock market, because like I said before, it's a marathon, not a sprint. And why rush into getting into a trade when it's not even trading that well? But that's another thing, is just to mitigate, or not mitigate, but try and prevent any losses, and try, if you do lose, understand that it's part of the game. You're gonna take some losses. Just trying to prevent how much you lose. Don't just be like, oh, it's gonna go up tomorrow, because most of the time, I'm not even gonna lie, it doesn't go up tomorrow. But with that being said, another thing with trading is that you're really going to learn from your experiences. And when you get into a trade, always think about your experiences too. Because, like, let's say if I got into this trade, like I said before, and I got into early, I can go into, my past when I got into early and, I lost a bunch of money because I didn't get out in time. I could use that as an example and be like, I don't want that to happen again. I'm going to take this $50 loss and get out. So that's another thing that really made me profitable. So, in short, make sure you guys mitigate your losses. Don't take too many losses. When you see profit, take profit. If even if you're up $50, see profit, take profit. That's another thing with having unlimited day trades. Like, let's say if I got in, like, a lot of times, like, we're gonna use NVIDIA for example. Let's say a lot of times I got in. Not gonna use this day because it kind of dropped a bunch. But let's say if this day we bought the dip buy, it printed green. We see profit. You can either take profit here because it's kind of like almost to the 50% mark from the market open, but you can either sell it here and or you start seeing it go down. You just be like, okay, like, this is my trade for today. I'm up $20. I might as well just take the $20. And then the same thing is, like, this is one of those trades where you'll take that $20 and you'll see it later on go up even more, and you could have made like $100 to $200. I'm not saying that you would make $100 to $200, but like, you can see it spike up afterwards. But at the same time, you're really just like testing your mindset, because then you can probably even sell it here and then be like, okay. And then if you have more money, you can buy another dip buy, because you can see that it's bouncing off this key level. That's another thing, is to understand supports and resistance. Some key levels that I bounce off of. One of my ways, these aren't really my supports and resistances though. I got to look for some new ones, but I would look at key levels that I bounce off of in the past. So basically, like, let's say if you bought here, you see it go up and then it goes back down. You can use this as a key level. You can mark this, and then you can go in the past, like here, right here. It bounced off of this in the past with a dip buy. So you can really use this as a good support. With that being said, you can use it as a good support here, and then also you can go in like the 4 hour time frame. It's going to show you a little bit more, and then see if you can find some more supports that meets it. But the more times that it acted as a support, the better of a support it is. So that's why I recommend looking at supports, because normally it bounces off of supports. But with that being said, I will come out with a better course. I kind of just wanted to gap a little bit and kind of explain how I became profitable. Let me know if you guys want to see a video of me actually making a course, then I will. But thanks for watching the video. Smash that like button. Subscribe if you guys are new. Comment down below any of the lessons that you learned so other people can see. And if you guys watch this video fully, man, I appreciate you. Just comment W if you watch this video fully. Just want to see how many people I actually did. I love you guys. I'll see you guys in the next video. I will for sure try and make a better course. I just wanted to kind of just yap. You can listen to this while driving or anything like that. You can listen to it again, and hopefully, you might not be, you might be in that situation where you're like, I'm not going to listen to this dude right now, but you're really going to understand later, be like, damn, he was right. And I'll probably come out with a part two, just yapping, explaining a little bit more about, more things. Another thing is, you don't got to spend a bunch of money to make a lot of money. So I understand that too. Thanks for watching the video. Smash the like button, subscribe if you guys are new, and I'll see you guys in the next one. Peace out.